What's up guys, how are you doing today? Welcome to today's trade recap video. We did end up taking a trade today, but we lost. So I'm going to run you through my analysis, what I saw, and the reason I took my trade. And also what I could have done better, and also did I follow my plan and stuff like that. I'm going to run like all through all those notes with you guys. So yeah, let's get into it. Let's remove all those drawings and I'll show you exactly what I saw. I'm going to analyze down from the daily time frame all the way through to the 5-minute time frame where I took my trade. So what's happening here is, obviously you guys saw we are bearish on the day. I'm not going to annotate everything, but I'm going to explain as I go. So I'll mark out everything. You can clearly see on the daily we are bearish. On the 4-hour, you can also see that we are bearish. If you go and you look, and you can obviously see, okay, you know what, this is my main draw on liquidity. Obviously price is still far from this draw on liquidity right there. So when you go and you say, okay, we're marking out our draw on liquidity for the week. Let me just go to the weekly time frame and do that quickly, and then okay, daily time frame, obviously you can see this daily low over here. We've got another draw on liquidity. Obviously you guys can see I'm already leaning more towards the bearish side of things. So yeah, obviously now when you look at the 4-hourly time frame, what I saw was we have this bearish fair value gap, or we had it. Now got that bearish fair value gap on the 4-hourly time frame. We've got these lows that we didn't tap into just yet. We've also got this, the top of this 4-hourly bullish fair value gap as a draw on liquidity. Okay, let me go lower on my 1-hourly time frame. So what I saw for my trade was, you can I saw on the 4-hourly time frame that we were bearish. When you go and you also mark out your equilibrium on the 4-hourly time frame, you can see price came into equilibrium but still starting to push through it. We got this 4-hourly bearish order block as well there, but obviously I didn't wait for that. I didn't wait on that. So yeah, like I said, this is what I saw for my trade. Got this 4-hourly bearish fair value gap, and I waited for price to just tap, come into my 4-hourly equilibrium right there. So yeah, on my 1-hourly time frame, you can clearly see that we are bearish. Also got a nice bearish order block on the 1-hourly right there. And what I did was I usually start looking for trades around 9:30. That's when I start looking, and then when I actually execute, I execute in my AM session, which is my 10 to 11 AM session, New York local time. Okay, if you look on the 1-hour, you can clearly see that we were bearish. Also on the 1-hourly, we were bullish prior to we were bullish all the way up until AM session close actually. So when you go to the 15-minute time frame, you can see these highs were swept as well. We swept out these highs over here for sell side liquidity. And we broke structure towards the downside on the 15-minute time frame as well, but I'll get more into that because I took my 5-minute, my execution on the 5-minute. So as you can see, price, let me show you, there's the 1-hourly high that I marked out, and there's the 4-hourly high right there. So you can see it's both a 1-hourly and a 4-hourly high. And when you go to the 5-minute time frame, you can see we broke structure towards the downside on the 5-minute time frame right there, after we swept liquidity, confirming that this was a liquidity sweep on the 5-minute time frames. And also my lower draws on liquidity, I'll show you guys what I was looking at there as well. My draws on liquidity with these lows, but actually let me actually just show you first how I entered, and then I'll get into my targets and stuff as well. So anyways, you can clearly see immediately after price broke structure, we ran down, got this massive displacement towards the downside. As soon as AM session opened, we started running down. And also we formed two bearish fair value gaps right now. We formed this bearish fair value gap over here, and we also formed this bearish fair, excuse me guys, let me just get the right tool here. Okay, there we go, got this bearish fair value gap over here. So what I generally did was, you can also see when you go and you mark out, I'm going to mark out something quickly. It's my 2 a.m. to 3 a.m. session, New York local time. I think that's the correct hour. No, actually, ignore that. Please ignore that, guys. Anyways, okay. So now you can see that we broke structure to the downside, which means we are bearish, and also we broke structure to the downside on the 1 hourly time frame, which means we also hit this 1 hourly bullish fair value gap as well. And all my time frame chains were aligning. And also what I'm not completely sure of this, but if you do enter from a fair value gap, I actually have to go and back test this, because now I've seen in my previous test results or back testing results, when I go and I test things like this, sorry, let me just put my phone on silent here. Okay, there we go. Your fair value gap usually draws to your, like, how can I say, if you've got like 1, 2, 3, 4, say 5 fair value gaps, but obviously that's not the case here. But let's say you do, and you take your Gann box, which is the tool I use to mark my equilibrium. Price usually draws into your equilibrium and then then goes lower or higher. Understand? So yeah, when you look at your fair value gaps here, also another thing that I've seen with backtesting is that the market usually reacts off of your fair value gap, your first fair value gap, or your latest or newest, or let me say it like that, your excuse me, the most recent fair value gap you've got there. So like this one, I've expected it to rather react from this fair value gap than this fair value gap. But also another thing that I keep in mind is that market always has to go and close an imbalance. So yeah, that's actually something I have to go and look at. But I do believe that I have to be more patient, because if I took this fair value gap, I would have still lost the trade, because my stop loss would have been on this high here. But if I took this fair value gap and it would have worked out, then I would have been good. But the thing is, with it being no news Monday as well, and no news Tuesday, that's also something I've learned, like today still. Your price action is pretty, how can I say, it's not pretty good. It's not good at all. It's not pretty at all. So yeah, on your Monday and then on your Tuesday, like today and tomorrow, we've got no news, and then Wednesday we've got CPI. Understand? So it's market, it's slow, it's really choppy. I don't know, okay, I'm not gonna say choppy, but it's slow. It moves very slow. And then on when I took my execution, I looked at price coming into this fair value gap low, and my stops were just above this first candle for me of this fair value gap right there, and take profits were on my final TP was on this, where's that, 4 hourly imbalance, no sorry, it was a 1 hourly imbalance. Yeah, that's correct, it was a 1 hourly imbalance. So I've got my final TP on this low, and my second TP was on this fair value gap right there, and on my 30-minute time frame, I put my I actually worked off of my first and my second TP, not really something that my first TP was right around here, and then my full TP was over here as well. So what I did was I entered with a minimal risk. I'm trading on a $10,000 demo account, and I entered with a 0.50% risk, which is half a percent, and I lost $50, which is nothing on a $10,000 demo account. So that's the thing. It's a demo account, but I feel better because I de-risked, and that's what I took on my trade. So I risked about $50 and a little bit more than $50, and I was looking to make about $172. This is what my trade looked like. So things I could have done better on this trade. I could have been more patient, and honestly, while I was looking at taking this trade, it's like, I don't know, it's just like a bad habit that I have to get rid of, because now I get scared of the market leaving me behind. It's like FOMO in trading. I don't know why it happens to me, but it's something I have to get rid of. And price just didn't go my way. I risked less than I usually risk, which is 1%, and because it was no news Monday, I just learned that today. But because there was no news Monday, I de-risked on it as well. I don't know actually what else. What I maybe could have done better. Was just be more patient, and what I did wrong here was I was not as patient as I needed to be, and my emotions just weren't working, because I didn't over risk or anything. It's just that feeling I got when I try and when I take the trade, and I'm getting afraid of that loss, and I was thinking of moving my stop loss. I was thinking of it. I was like tempted to do it, but then I said to myself, you know what? You're going to sit on your hands, and you're going to leave this trade and let it run, because it's on a demo account, and that's how you learn. And you do not chase the money, you chase the skill. The money is just a benefit of the skill. So I want to give myself some time. Actually, I want to give myself about 3 to 6 months, just of demo trading and learning the skill. Because when I look at this now, I did actually stick with my strategy. My bias was in line. I had the right entry criteria right there. I risked what I was supposed to risk. I only took one trade. I can either be trading an AM session or PM session. I traded the AM session, which is good. I stuck with my strategy. Even though I lost, the market did just not go my way, and I understand that the reason why it did not go my way. And I just wanted to motivate you guys today. And I just felt like, because I took this loss, I was discouraged. I didn't even feel like making this trade recap, and I was like, you know what, it happens. The market's not going to always go your way, and I have to understand that all of us have to understand that try to become profitable in trading is that there is losses, and your goal as a trader is trying to minimize those losses and to perfect your skill, just like basketball, just like soccer, rugby, even just cricket or baseball or whatever sport. You cannot be perfect in any sport without practice. You're not going to be perfect, but you cannot get good and without getting those reps in. And just like in trading, the more trade you take, the better. The more you learn from it, but you have to actually have a system when taking those trades. The more you perfect your system, if you take those trades, you have to learn from your losses. Otherwise, it's no use you taking the trades. But and that's my trade recap for the day. And just a reminder to you guys also watching me and watching me try and improve as a trader. I just want to remind you guys that if you want to get into the skill, there is going to be losses involved, and you have to have a step-by-step plan set out in front of you. What is your risk management plan? What is your entry criteria? What is your stop loss? What is your exit plan? What is your TP? Where do you put your TPs? Do you use order blocks, equilibrium to enter, or what is your confluences you use to enter? Just the example I use now. So yeah, thank you guys so much for watching, and tomorrow I will be trading again. If I do, I'm not going to be as impatient as I was today, but I will be looking at the market tomorrow and see what I can get out of it. If there's no trade taken, I'll just do like a market review and also post that. Okay, thank you guys so much for watching, and enjoy the rest of your evening. Bye bye, guys.